It's playing out, fam. Oh, it's that time. We're here. Hump day, Fed day, make you feel real good day. Bezos is buying real estate. What are you doing? I signed closing docs today. That's fact. Know what I'm doing. We got to get into this. This isn't the whole thing today. We're going to talk about the Fed first. We're going to look at a couple charts. We talk about interest rates went down about 0.25% today. Let's see, where do we begin? So Fed holding rates steady. Remember, it was the last meeting. So the beginning of this huge run-up that's taken place on the heels of a Fed meeting where rates didn't go up. But it was clear that they were done raising rates. And that marked the bottom in stocks. And since then, it's just been higher, higher, higher. Now, the way the Fed trade works, they're ahead of it 6 months. Remember that. So when the Fed does start cutting rates, you'll probably see stocks run a little bit further and then peel back from there. Did see an all-time high in the Dow Jones today. All-time high. Let me get this on one chart for you. All-time high. Let's see. No, daily chart. Give it to me. There it is. Highest price ever by a little bit, but still all-time high in the Dow Jones, which tells you that the Fed trade is already on in Wall Street, which means that they believe we're within that 6-month window to getting rate cuts. Now, a lot of the surveys were saying this. Okay, this is actually from yesterday. So this is pre-today. They were expecting cuts next year. I don't see how you could, based off what Jerome Powell has said, I don't know how we could expect cuts because he said, we're willing to raise, we're willing to do what it takes to get to 2%. By the way, we're live. If you want to say hi, if you want to drop a comment, a question, I'm going to go through a whole bunch of stuff today. Mortgage rates are down. Most people don't know. I did the Google thing the other day to show you, I put that on a story or a reel. I was like, look what Google says interest rates are, like 7.9, 8 point something percent. No. But why does Google say that? Why don't more people know what's going on? This is why. We're going to get to that. We're going to get to that in a second. So Fed holds rates steady. Signals cuts are coming. Stock market, Wall Street already knew about this, obviously, and they started running the stock market up. Now, the reason why would they cut? Because the Fed is seeing great inflation data. We got multiple very solid inflation reports in a row. Here's CPI. Here's all of it at a glance. I'm giving you all these links in the description on the YouTube. Here's another one. Wholesale prices flat. All this stuff is looking good. And you're starting to see some signs, some things sort of breaking economically and in the economy. So not breaking, but not looking great. Give you the Fed the reason to believe that we're going to see some deflation. If we see some deflation, then they're actually trying to, they just love to pull the trigger on the money printing machine. I'm telling you. What he said today, I can't remember exactly how it said, but basically was saying we want to get ahead of it. We want to cut ahead of getting below the 2% number. So remember, he was hell-bent on getting inflation down to 2%. And now he's like, no, we need to cut before so that we can ease into that 2%. We don't want to go too far past it. In other words, we don't want to see massive deflation. We want to continue to see growth. We want to continue to see appreciation. We don't want it to get too far below that 2% number. So that means the cuts are coming sooner than anyone would have anticipated. National homeowner equity up 1.1 trillion year over year. Just crazy. So it's always been interesting to me why there weren't more big firms, big rich titans who already made it, like buying all the real estate. I've always wondered why there wasn't more of that. This is the reason I've been warning people of this over a decade. Like, this has got to happen at some point. We're finally at that point where you're seeing all big money players, all hedge funds, Wall Street money, legacy money, old money, new money. It all wants a piece. There just isn't enough. There's not enough for all that, guys. There's not even enough for all the new households that are being formed in the country, much less for Bezos to come in and start throwing his weight around. It's just not enough. So you know what's going to happen. Now with rates headed lower, and today we got some really nice price action. In fact, let's bring that over here. I don't have that on the screen for some reason. But your boy nailed this. My goodness, did I crush this or what? How long have I been telling you that the structure, the formation here was beautiful? Because we had the lower lows being formed, and then we got the higher high. And that was our clue. And when it peeled back, I remember I told you that's totally normal. It's perfectly okay. We're going to get a pullback. The question is, will we have follow through? And we got it. And it's looking really, really good. I think Wall Street is unwinding this short trade that's worked for them for so long. I mean, look how long being short bonds has made just printed money. It's a long time. We're talking about the top was back in February 21. That's almost 3 years ago. Bonds. The 3-year bond short? What? Who could have possibly thought that that would be the moneymaker of all time? And yet, look at what happened and look at where it is. Now, that all needs to come back. If you just look at that, if I point that where that high is over here on the charts, way up here. Okay, so now let's put that in perspective. That is just so far away from where we are right now. Not saying we're going back to that spot. Not saying that's the target necessarily. But just a 50% retracement or something has rates in an amazing place. Okay, so we don't even need a full retrace. A 50% retrace, a 382 retrace on this is going to make rates go much, much lower. And that would be assuming that the downside price action would continue, which I don't think it will. I think this is an actual reversal. We're expecting much higher prices here for bonds. I think they're unwinding the short trade and the longs are coming to the table. So remember, we want these bond prices to go higher because that means lower mortgage rates. The higher the prices on the bond, the lower the yield, aka the rate. And that's what we've been seeing. But notice from the bottom, okay, that's not that much of a move. It's not that much. There's a lot more meat on this bone, especially if the Fed is going to cut rates. Because right now, you can go to the bank, put money in your savings account, and get 4 or 5%. That ain't going to last for long. I hope you all enjoyed that. I hope you did. I know I did. I hope you did. Because that is going to be gone. It's just simply not going to be a thing anymore. Although it was nice, it is definitely on its way out. I thought I had a button for this. I guess I don't. Okay. So anyway, so that's what's going on there. Just looks so good. It's so perfect right now. The setup is beautiful for rates to go down. This is the sweet spot I was telling you about. Now, I talked about this a couple weeks ago. Hey, we're at that point. Rates are going to be lower than most people realize. Most buyers don't realize how low rates are. Most sellers don't realize how low rates are, and that there's a frenzy of buyers around the corner. If they did, they wouldn't sell right now. That's for sure. At least wait a couple months. Give a chance for those buyers to get out there and get active. Now, if you're a buyer, you want to beat that line. Okay. If I tell you, look, Best Buy is giving away TVs on Black Friday, you just got to be one of the first 10 people in the store. You're going to get in line. That's what I'm telling. This is the real estate equivalent of that right now. Okay. Bezos is he's funding, he's raising money. He's not even trigger pulling yet. He doesn't care about interest rates. None of these firms care about interest rates. They're just looking at price. That's why they don't mind the interest rates being higher. That's why they don't mind shorting the bonds, kicking the rates up so you won't buy the real estate so they can buy it. You see how that works? They're pulling triggers. You're on the sideline. Now, do you see how this all pieces together? Good news is, although I don't think this will pass, it's good to see it. There is actually being introduced by a couple senators, a action to ban hedge fund ownership of residential housing. Now, if this does pass, my guess is that there will be loopholes. The Wall Streeters will figure it out. It'll make everyone feel like, yay, kick Wall Street out of real estate. I don't think it'll pass. If it does pass, like I said, probably loopholes. But it's nice to at least see that we're coming to the table and going, hey, listen, if you want to get prices under control, two options. You have to kick big money out, or you have to build a hell of a lot more. But the more big money is invested in it, the less they're going to want you to build. They don't want you creating supply. This is the thing that people don't understand about Bitcoin. There's only so many. That's it. There's no way to create another Bitcoin. In fact, all that happens every day is people lose them. They're lost because someone forgot their seed phrase, lost their phone, whatever. There's just less and less and less. And that's kind of the situation we're in with real estate right now. It seems like there's just less and less and less, even though there is building taking place. It's because the household formations are just outpacing the building so significantly. So this is something, while I cheer this on, it was Jeff Merkley and Adam Smith, Oregon senator and a Washington senator, trying to put something on the table here. I really wish them the best, but I think there's very little chance that this actually works for the task at hand. Might, could, maybe, but probably not. So what we're going to see right now, that we got 2 weeks to the end of the year. Pretty much at this point, it's just kind of it's a push. A lot of people are saying, hey, I'm interested. I want to make a move after the holidays. Totally get that. Very normal. That's what most people are going to be doing. Some people are out there right now. I mean, I've got people texting me like, gosh, I've got to get into a property before these prices go up. I may never be able to buy again. I'm like, wow, you get it and still might not be able to get in. So many people don't understand the opportunity that's passing, and they won't till 10 years from now, 10, 15 years from now. I expect I will be invited on all kinds of TV shows. Everyone out there who's been following that is, that gets big and has a huge podcast, you'll invite me on. How did you know this is going to happen? It's basic. What happens next is easy to see. By the way, refinance special, FHA, VAs, UWM is offering this right now, 5.749, basically 5.75%. If you have a 660 credit score or better. So that's something to take a look at. If someone has a rate, I'd say over 6.5 FHA, VA, that's something worth taking a look at if you're eligible to refinance and run numbers. And I'm happy to do that for you. I have a very comprehensive calculation that I run before we do any kind of refinancing. So that's something to keep in mind of. Get into the high fives, low sixes for FHA, VA outside of that refi special. Conventional loans getting into the low sixes now more. Condos and higher balance stuff is still high sixes. And then jumbos are still kind of in the low sevens. They don't move as much, not as quick to move on these kinds of things, but that's okay. A couple articles here I want to talk about. Then we're going to look at some charts, and I will do some questions and comments if you have any. Feel free to drop a line, say what's up. Whoa, what happened there? Okay. So this one, more retirement savers are borrowing from their 401k plan. These are leading indicators of economic stress. So remember I was saying, okay, hey, the Fed is going to take action because they believe they've run things aground enough. That's the only reason they're going to flip. And so there's got to be some sort of leading indicators of stress before the Fed turns things around and says, okay, time to loosen it up, fire the engines back up. So that's why you're seeing things like this, which would normally be like a scare shot to people who are market participants. It's not, because the Fed needs this. This is the upside down that we live in now, where bad is good. Bad means the Fed will take action. If things are too good, the Fed will actually come in and knock it down. And so reading the market just becomes so much more difficult because of that. Here's one. I've got a major tip on this. Is it good to pay your credit card bill early? So this one says, aside from potentially protecting yourself from late fees and high interest charges, paying your credit card early can affect your credit. I actually don't care what this says. I'm going to tell you the truth about this. And this is a great hack. The system is set up so that when your credit score spits out every month, it's as low as possible. The system's set up that way. So if you want to beat the system with regard to your credit card, here's what you do. You make the payment before the statement ending date. So you got to set yourself a reminder. Okay, hey, my statement ending date is the 15th. So on the 10th, I'm going to check my balance. I'm going to pay it off. Okay, so that on the 15th, your balance is zero or really low. Maybe use it a couple times. It's low or it's either zero or really low. That's when it gets reported to credit. So on your statement ending date, boom, right then and there, before you get the bill, it's sent to the credit bureaus. Here's what their balance is. So you go and you pay it off and you think you're getting credit for that. But if you run it up again the next month and do the same thing, literally your credit score never knows that you've ever paid this thing off. So if you want it to show a certain balance, you got to get that to be your balance before the statement ends, because once the statement ends, all the numbers get shot out to credit bureaus. That's a huge hack, especially if you're paying your cards off or using them up a lot and paying them down a lot. Make the payment at the right time, and that will help your credit score potentially a bunch. I don't know why I'm getting weird lighting. What's going on with my camera? You okay, dude? Getting weird lighting there. Okay, chart time. What do I look at? What do I look at? Orange coin. Okay, let's look at it. So for my Bitcoiners out there, we'll look at Bitcoin. We'll look at Tesla. We'll look at the S&P 500 for sure. I'm watching Cardano on the crypto side, Ethereum. These are my main holdings: Bitcoin, Ethereum, Cardano, and Bitcoin big time. Tesla. That's pretty much it. So this is the orange coin. Now, we had this nice channel right here. So all I did was double the channel. And the reason for that is whenever you have a breakout of a channel, same direction, particularly, doubling the channel is usually where it's headed. So in other words, we had this channel that we're in. It was a perfect channel, a lot of resistance at the top of the channel, and then boom, it just shot above it. So I know exactly what to do when that happens. Boom, take the same channel, copy and paste it, add it on top, and that's your target. So where we're headed is likely we're going to touch this guy before we turn around. Now, if it takes this one out too, we do the same thing again. But this is kind of what I'm expecting. So this is, and a lot of people have said 48,000. So I'm thinking, somewhere between 48, 49, maybe 50,000 could be a spot where you could get a turnaround and have a more pronounced sell-off. As of right now, we had a big sell-off a couple of days ago. And since then, a lot of support has come in. This daily fair value gap right here, I don't know if you can see that or not. Let me try to zoom in more. This is the analysis that I use to make my investments too in stocks. So fair value gap right here gets respected. See those wicks, price comes down into it. There's buyers there. So these unfilled orders, which cause this gap, this inefficiency, buyers are in there. They've stepped in. So you see this bearish fair value gap right here. So those are kind of dueling gaps, but the trend is higher. So I would say this one until it gets disrespected, this is the guy. And it looks like here, if we get continuation tomorrow, if we go higher than this candle right here, if we get above 43,800, I think, then that's kind of when we're going to say, all right, very likely now we're going to see that continuation. If it peels back and starts selling off here, then we could see much lower prices. So it's a very crucial moment, in my opinion, for where Bitcoin is at this juncture. Let's take a look at the S&P. All right, remember when the S&P gave us that fake out, I got really concerned. Dipped outside of the channel, okay? And usually that's pretty bad. Like that's a break of a major trend line on a daily chart. Like we're going to hell in a handbasket. It's all over. This was right when Jerome Powell, also known as a good friend, Jerry Powell, when he came out and said, hey, we're not raising rates, but we will, we might, we will, we might, we might, we will. And of course they didn't. And that was the signal right there that it's over. The selling's over. So many bear trapped right here. So many bears got trapped right here. So many people sold this and just got smoked. Market maker will do that to you. Be careful out there. Be very careful out there. Market maker got smoked people right here who tried to short this. And now we've gone up. We've actually crested this old resistance, which we bounced off last time. I mean, we are just firing higher. I think we're very likely going to see all-time highs in the S&P and the NASDAQ. We just saw an all-time high today in the Dow, a leading indicator for once. Very likely we'll see all-time highs in both. And remember the original prediction for that, okay? Original thesis, hypothesis, if you will, is that we're going to see all-time highs in stocks, probably crypto as well. All-time highs. And right around that time, when we have those all-time highs, we are going to see they ban stock trading for members of Congress. There's bipartisan support for that. That will mark the top. Just like when they did that for the Fed governors, it marked the previous top, which was at all-time highs. And they said, oh, Fed governors can't buy stocks anymore. Can't make insider trades anymore. and we just tanked after that. Tell me that you don't think they knew that was coming. Come on. Even when they say we're stepping down from corruption, just one more little piece of corruption for you. Just one more. Never ending. So that's the S&P. I do think, yeah, I mean, we just broke serious resistance. So, and with a fair value gap on the daily side yesterday, I mean, this thing could just keep going. It's hard to say. You never know. Market can always go up or down. Can always go either way. But I am turbo bullish at the moment until I have a reason to think otherwise. And if the Fed really is cutting next year, then the last few weeks of this month could be absolutely insane. So this is where if you're on the sidelines, you're not invested. This is where you really feel it. It really stings. It's so hard to time the market. It's the same thing with real estate. Like, who saw that happening during COVID? And what really happened with real estate during COVID? Well, what really happened wasn't these guys coming in and buying real estate. That isn't what it was. That's what they wanted to happen. Okay. They were hoping that would happen. But it's not what happened. In 2008, that's what happened. They got retail completely out of the market. They were buying houses by the hundreds on the wholesale market. Banks were writing the losses off. Then another bank was buying the properties, and they were just doing this shell game with the money, getting bailouts to cover their losses on this side and then owning the property still on that side. That didn't happen in COVID. What happened in COVID? What happened in COVID was a first realization, the first sort of epiphany that the younger market would have with regard to real estate, because many people shunned real estate. They hated it. They were mad at it. They watched their parents go through things. They personally went through something. Maybe they were young and they tried to buy a house and they had a foreclosure and it was horrible. And so they were like, screw real estate, man. F that. And then what they realized 10 years later was that was actually an awesome opportunity to buy. And if I had bought then, instead of selling then and bailing, I would have been in great shape. That was the bottom. 2010, 2011, that was the bottom. When things looked terrible, that was the bottom. So then what happens in COVID? Things look terrible. Buyers came out of everywhere. So the market did learn from 2008. We saw it in COVID. What happens for the next pandemic or the next crisis, which 100% for sure is coming? They're not even trying to hide it anymore. These movies that are being released, they're telling you what they're going to do. You think it's a coincidence these things happen during election years? It is not. When the next crisis happens, what do you think is going to take place? When dumb money sold real estate in the crash, they lost. When the same dumb money bought real estate, I say dumb money because that's retail is dumb money, right? When the same dumb money bought real estate in COVID and won big time, what do you think is going to happen the next one? So don't come to me. People are always trying to justify some sort of hypothesis about the real estate market crashing. It's fun for me. I do enjoy it. I want to hear what you have to say. Look, if you think you have a good argument, please bring it. But just know at some point, you're going to be like, you aren't going to want to have any more because you really don't have anything decent to talk about. You could say, well, this, that, the next pandemic, this, that. What happened in the pandemic? Pandemic was great for real estate. You're talking about the economy. You're talking about real estate. Are the two connected? Sure. But when we have, this is hyperinflation, by the way, that we are 100% in hyperinflationary environment. I don't care what the inflation reports say. There's so much money out there that it's mind-boggling. Mind-boggling. Still, somewhere between 30 and 40% of all homes are purchased in cash. What? It's bananas. So there's so much money out there. It's hard to wrap your mind around it. Know that. And there's guys with tons of money like Bezos here who are raising money to go buy single family homes. Why? They know it's an incredible long-term asset. At the end of the day, it's monopoly. That's what people are starting to figure out. Now, is real estate the best way to own property? Single family homes? Yeah, definitely. Tax advantages, income, simplistic, part of our culture, part of our lives. You can buy land, you can do other things, you can develop multifamily. There's all sorts of things they could be doing, right? But single family homes, everybody wants that. I don't know too many people who are like, it's my dream to be in an apartment. Maybe if you're on the streets, if you're homeless, you'd say, I would love to have an apartment. There's always someone who wishes they had your life. Just know that. But it's not most people's financial goal, but living in a house is. There's no question. All right. Let's see. We're going to go to, we did that one, did that one, did that one. S&P just taking off like a rocket. I'm most proud of today of all the things I did. Bought Tesla this morning when it was selling off into this fair value gap right here, into this wick down here. And I'm just accumulating it. So I'm not buying a lot, like 10 shares, 20 shares, 15 shares at a time. And for whatever reason, I bought about 50 shares this morning across a couple different accounts, accumulating some Tesla here. And in the afternoon, we got the good news and it rocketed up. So I got in like 231 and at the end of the day at 239. So that's a good feeling. But this is the thing that most people don't understand about Tesla. And you should really YouTube this. Don't take my word for this. Just YouTube Tesla robot. Most people just do not understand that this isn't really a car company. It's an engineering artificial intelligence company. The best AI play, people want to talk about, these different chip makers and stuff for AI. Guys, I know it's needed, but where's the real AI? You're buying the chip maker because they're making these chips which are needed for the AI, which is great. It's necessary and it's probably a good investment. But is there more money in the AI itself? Tesla has by far the biggest head start on AI. And I'm not talking about like ChatGPT. I'm talking about robots, son. I'm talking about cars that drive themselves and a robot that's going to make your bed for you in the next 10 years. Going to cook your meals for you, going to do the laundry, going to clean up the house, going to watch your child for you, probably. The Jetsons are coming, and it's courtesy of Tesla. These robots will do all the things you hate to do in your daily life. They'll do it all. Clean the toilets for you, take care of all this, take the trash out, wash the car, mow the lawn. These robots will be somewhere in the $20,000 to $25,000 range, and it's insane. Completely insane what's going on with them and how easily it will be for everyone to afford them. It will be crazy for you not to have one. The potential industrial revolution that could come off of the heels of the distribution of these robots is crazy. Now, could Terminator happen? We all get smoked? Totally. Totally. Who knows when or if that would happen? I trust Elon. He says he's trying to make that an impossibility, that part of the hard coding for the AI in the robots is an understanding and a value for life. There's no one I trust more to make that happen than him, but just the investment possibilities are bananas. You will have a robot. If you're around 10 years from now, you'll have one. It'll do great things for you. It'll allow you to do so much. What's going to be really crazy about the future is when you go into businesses and there's going to be like one human that owns the business and then a bunch of robots that work there. Like even at like the daycare is going to be a bunch of robots. And you might think, well, that's crazy. Why would anyone want to do that? The robots don't fall asleep. They don't slack. They don't look at their phone. They would be keeping an eye on your kids like so closely. They would be able to keep them from making mistakes. They'd be able to see the mistakes, see the fall before it happens. You have to see these things in action. Just Google Tesla robot, okay? Or YouTube it. Trust me. Okay, so Tesla, really liking it, looking incredible. GBTC, which I've been telling you about forever and ever and ever, still trading to a discount to NAV. That's the cheapest way to buy Bitcoin is to buy GBTC. They are very likely going to have their spot ETF approved. When that spot ETF approval happens right now, it's at 35.59. Net asset value for GBTC is for every 1,000 shares, they have one BTC. So with Bitcoin trading at 42,800, this price should be 42.80. It's 35.59. Spot ETF gets approved just like that. You're going to see the correction to the correct net asset value on this thing. That is by far the cheapest way to purchase Bitcoin. GBTC if you want to. Not financial advice. It's what I own. People ask me about it all the time. So there you go. They have the same thing for ETH. What is it's ETHE. ETH for ETH and then ETHE. That's the Grayscale Ethereum. Trust is where I own some Ethereum too. And gold got over $2,000, which is interesting. Okay, let's see. Let's go back to the calendar here. Let's take a look at the rest of the week. And then we'll do a recap. So tomorrow, jobless claims tomorrow. I have a feeling the Fed already knew what that looked like. So we've already got the news from that. But that is something that can move the market early in the morning. We'll see. And then Friday, not much going on. State manufacturing survey, Empire State. That's it. Meh. Not a whole lot going on Friday. So a lot of the business is probably done today. And you saw what happened. Price went up pretty much across the board, particularly on this bond chart, which we just love to see this price action right here. Bonds going higher, rates going lower. Look, here's the deal. We have a small window of time here. It's a rare moment. This is a situation that is hard to categorize because you just don't see it very often. People talk to me all the time and they ask me, how do I time the market? How do I get in when it's the best time to get in? And I'll always say the same thing because the answer is the same. You want to get in. If you're really trying to time the market, if that's what matters to you the most, you really want to get in when rates are about to drop. Okay. So before rates dropping shows up on prices, before other buyers know, before sellers know, that's when you would want to get in and pull the trigger. Because you can always refinance later. And if that becomes more imminent or it's closer, then that's even better for you. That moment has been these last few weeks. It won't be too much longer before we start seeing more news, headlines about rates dropping. You're going to see more of that. Some people will see what the Fed said today. They'll see this, 3 cuts coming, and that'll be enough to get them in motion. It's going to start happening. Buyers are going to start coming out of the woodworks. Prices 5 years from now will absolutely blow your mind. Very good chance. Anything could happen. Never know, but very good chance it'll be mind-boggling. Look, if you want to get a wholesale home loan rate, give me a shout. Email, call, text. I got you covered. We got a refi special right now through UWM, 5.75%, FHA, VA. You need a 660 credit score. Let me hook you up like a tow truck. Have a great evening, fam. I'll be here if you need me. Take care.